Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, we are going to look at 3 stocks that I bought this week. So hope you like this video. If you do, give it a thumbs up. If you are new to the channel, just wanted to say aloha. If you are new to investing and you want to learn about which companies to invest on, whether it's dividends, growth stocks, or even penny stocks, you've come to the right channel. Hit that subscribe button. Don't forget to hit that notification bell so you don't miss out on some of the videos that I put out. With that said, let's take a look at these stocks that I bought this week. First on the list is Altria. The ticker symbol is MO. If you're not familiar with this company, a lot of people consider it as a sin stock. So some people they don't like these kinds of investments. And that's okay. For me, I like it because of I really like the dividend. So for those of you that don't know this company, it's one of the largest producers and marketers of tobacco, cigarettes, and other related products. So there's a lot of information here. If you want to learn more and you want to get some more information, go to their website and look for the investor link. You can see a lot more information regarding that. So if we look at some of the assets, you look at the total assets, it's about, this is in millions, so 48 million. And then look at the total liabilities, 48 million. I also like to look at the cash and cash equivalents. So as you can see, it's 5 million in there. Yeah. And then I always like to look at the debt too. So the total debt is about 29 million. Now, if we look at tip ranks at the time of this video, it was at 47. Price targets is up in the 55 with a 15% upside. Now 12-month forecast rated as a high of 59, the average of 55, and the low of 48 with the rating of a moderate buy based on 10 analysis. You got 7 buys and 3 holds. Now if we look at CNN Business, you can see their forecast rated as a high of 68, a medium of 54, and the low of 40 with analysis recommendation of 8 buys, 1 outperform, and 10 holds. Now looking at bar chart, as you can see, their price target is at 58, the mean is 52, and the low is 43, with the average analysis currently as a moderate buy based on 12 analysis. So 3 months ago, it's been a moderate buy the past 3 months, 2 months, and 1 month. Pretty stable analysis. You got 11. 3 months ago, currently it's at 12. Now if we look at the breakdown, you can see there were 5 holds, 6 strong buys, and 1 moderate buy. Pretty similar to 3 months ago. 4 holds, 6 strong buy, and 1 moderate buy. 2 months ago it was 4 holds, 6 strong buy, and 1 moderate buy. A month ago it's 5 holds, 6 strong buy, and 1 moderate buy. Now if we look at Simply Safe Dividend, so based on their safety score, they rated as a 55, which is borderline safe. Now look at the dividend yield. Dividend yield is great, 7%. Market cap is about 88 billion. Now if you look down to the key metrics, payout ratio would put it under the 79%. Now we're looking down to the dividend growth. The last 20 years it was up 3%, which is slow. Last 5 years is up 9%, which is fast. If you look at over here, this is what I'm really excited about. Dividend growth streaks of 51 years of consecutive increases, and it's uninterrupted for 51 years without any reduction. So that is just an awesome run. For 51 years, they have not reduced their dividend, which is amazing. Your payout schedule would be at quarterly. You got January, April, July, and October, with the annual payout of $3.44 per share. Now if we look at Simple simply Wall Street, you can see based on their valuation, share price versus fair price, they rate it as undervalued. Currently it's at 47. Their fair value is about 104, so they rated this as undervalued. Now if we look at Google, you can see the year to date it's up 16%. So 6 months it's up 14%. A month ago it's been down, so and then there you got your 1 year, it's up 21%. The past 5 years it's down 31%. So and then you got your and then your max would be, you know, all time would be that one right there, 9,000. But now let's take a look at my position in Robinhood. So if you look at my average cost, it's at 47.66. I reached 50 shares already. My total return is a negative 0.16. So I'm down $3.79. What my goal is for this one is to go up as much as 300 and see and stop there for a little bit. I'm looking at possibly hitting 300 and see what I'm going to do afterwards. But 300 is my target at this point. Once I hit 300, then I'll stop for a little bit. Continue to focus on other stocks. I do have a dividend coming on July 9th, which is $17. I will be reinvesting that, so that's going to come back into it. So as you can see from here, so at that time I only had 20 shares getting and reinvesting it back to $17. So excited about that. Okay, next on the list is Swch, ticker symbol SWCH. For those of you that not familiar with this one, it is a telecommunication company based on, they have pretty much a lot in places. You got Swch in Austin, you got Swch in Atlanta, you got Swch in Tahoe, Reno, Tahoe, and then you got Las Vegas. So they operate and develop super NAT data centers. They also provide cloud services. So now if we look at tip ranks, at the time of this video, it's $21. Their price target rated as $21 with the price target of 22, average of 21, and the target of 20. And their consensus rated as a strong buy based on 4 analysis. 4 of them said it's a buy. Now, if we look at CNN Business, their forecast is in the high of 26, the medium of 21, and the low of 18, with analysis rating as 10 buys, 1 outperform, and 3 holds. Now, if we look at bar chart, based on bar chart, you have a high target of 24, a mean of 21, and a low of 19, with analysis rated currently as a moderate buy based on 8 analysis, and it's been strong buy 3 months ago. A month ago, then it switched from strong buy to moderate buy. Now, if we look down the ratings breakdown, you can see currently it's at 2 holds, 1 moderate buy, and 5 strong buy. Pretty consistent the past couple of months. Changed a month ago from 2 holds, 1 moderate buy, and 5 holds. Now, if we look at Google, you can see year to date it's at 31%. For the year, it's up 19%. 1 month, it's at 11%. 6 months, it's at 30%. So simply, if you look at Simply Safe Dividend, their dividend safety score rated as a borderline safe. The dividend yield is 0.94, and the market cap is $2 billion. Looking down at the key metrics, you can see payout ratio is at 72%. Now, if we look at the dividend growth, you can see 70% in August, which is very fast. It has been growing for the past 3 years. has been uninterrupted for the past 3 years, so which is a great start. Payout schedule, you get quarterly, which is March, June, August, and November, with annual payout of 20 cents per share. So if you look at Robinhood, currently right now I only have about 10 shares. I started small, as you can see, bought a couple. My goal for this one is to reach at least 200, and then I'll stop. Total return is up 33%. So I'll continue to wait for some dips, and then I'll scoop up a couple more. But again, my target for this one is to hit 200 shares, and then I'll start moving on to different companies that I want to invest on. Last on the list, you have Abbvie, ticker symbol ABBV, and this is a biopharmaceutical company that combines advanced science to make strides in drugs and treatment discoveries. So one of my favorite companies to invest on. Love this company. Great dividend company as well. Now if we look at tip ranks at the time of this video, it's at 112 with the price target of 122 with an 8% upside. 12-month forecast rated as a high of 135, average of 122, and the low of 105, with the analysis rating as a strong buy based on 12. You got 10 buys and 2 holds. Now looking at CNN Business, you can see their forecast rated as 144, the median 125, and the low of 105, with analysis recommendation of 14 buys, 2 outperforms, 6 holds, and 1 underperformed. Now if we look at bar chart, their price target is pretty similar. 144 is the high, 120 is the mean, and then you got your low, which is 98. Their analysis rated as currently as a strong buy based on 13 analysis. Pretty consistent, been a strong buy the past 3 months. Now looking at the ratings breakdown, currently it's at 3 holds, 1 moderate buy, and 9 strong buys. So as you can see, it's pretty much a strong buy the past couple of months. Now if we look at Simply Safe Dividend, based on their dividend safety score, which is 70, they rate it as safe. The dividend yield is 4.60. Market cap is 200 billion. Now if we look down cursor to the key metrics, you can see payout ratio is about 45%. With the dividend growth, the last 5 years 18%, which is very fast. Now if we look over here, dividend growth has been 7 years of consecutive increases and uninterrupted for the past 7 years, which is a great start. Payout schedule, you get quarterly, which is February, May, August, and November. The annual payout would be $5.20. Now if we look at Google, you can see based on year to date, we have about 7%, and then you got your year, which is 17%. All right, now looking at Robinhood, I was only able to buy 1 share for this one. Currently right now I have 12 with the average cost of 113. Total return is negative 0.27. So my goal for this one is to get at least 300 shares for this one. So I'm definitely gonna start focusing on buying a little bit more of this once I see it. Once I see a red day, buy a couple here, a couple there, but that's definitely what I'm focusing on. Definitely like this company. All right. Thank you so much for watching, guys. Hope you like this video. If you do, definitely give it a thumbs up. As always, please remember this is not a financial advice. This is just me sharing. Again, thank you so much, guys. Appreciate you guys. Please be safe out there. Stay cool. Keep investing. and I'll catch you guys on the next video, right? Take care. Aloha.